Gryphon Capital is a fixed income manager based in Australia and London. We manage institutional mandates only in the structured credit space, principally in residential mortgage-backed securities and asset-backed securities. We've only been institutional managers, and this is our first and only retail offering. The three partners of Gryphon Capital own all the equity in Gryphon, and we're also going to be investors in this new retail offering. Our institution, we provide bespoke solutions for our institutional clients who are typically conservative, either insurance companies and superannuation funds. The retail offering is also going to be a bespoke solution where we're taking elements from our existing institutional mandates that we've been managing for a long time. The investment objective of the fund is to provide monthly income for investors, 3.5% over cash, which is 5% today, where capital preservation is a primary objective. Capital preservation is paramount. So when you're investing for income, you want low volatility returns, where capital preservation is paramount. What we do for our current institutional clients is deliver low volatility, high absolute returns, and we're looking to bring that philosophy into the retail space. The way we achieve that is through our investment process and our stress testing. Data, when investing in asset-backed securities and residential mortgage-backed securities, data is key. The data is key in asset-backed securities. It's a big market in Australia, so we're only investing in Australian residential mortgage-backed and asset-backed securities. Total issuance size about 115 billion Australian dollars, double the size of the corporate bond market in Australia. While there's a lot to the filter at Gryphon Capital, key is for residential mortgage-backed securities, which represent about 85% of the market, we're investing in secured debt, and it's secured over residential housing. So the key for us is stress testing the fall in house prices, and we use APRA's 1 and 200 year event, which equates to approximately a 40% decline in the average Australian house price. In that world, our capital must be safe. Gryphon Capital is a specialist in investing in securitized debt. Securitization is a process whereby banks are taking liquid assets, be that residential mortgages or credit cards or auto loans, lease payments, and issuing secured debt, securitized debt into the capital markets. In Australia, 85% of the securitized markets are backed by residential mortgages. So the banks have issued residential mortgage-backed securities. The other 15% of the market are asset-backed securities. And these asset-backed securities are backed by auto payments and lease payments, credit cards, etc. The key risks are outlined in the PDS. When we're investing in residential mortgage-backed securities, one of the key risks is housing, and indeed a fall in the average Australian house price. The way we manage that risk is we stress test every security we invest in, assuming, on average, a 40% decline. In that scenario, we need to know our client's capital is safe. We're all about providing bespoke solutions where we're optimising the return for the given investment restrictions for each mandate. And the investment trust will be no different. Today, to achieve the 3.5% over RBA net of fees, the portfolio consists of about 90% residential mortgage-backed securities and 10% asset-backed securities. And then from a rating perspective, it'd be about 70% investment grade and 30% non-investment grade. The key features of the offer is to provide monthly income, 350 over cash, so 5% in today's world, low volatility of capital. Capital preservation is key. Trying to provide an investment solution that's not cash, it is a bit more risk than cash, but it's not an unsecured equity-like instrument that's going to have a lot more volatility, which we've seen play out in the last month. We're looking to provide safe, secure, 5% return, more return than cash, less volatility than equity-like instruments.